So this should have been kind of the first episode or first video I did of this, or the second one, but I'm going to be going over highs and lows in the market. So a high consists of two patterns. Highs, oops, consist of two candles, one up and one down. And what is super important to understand is that it's not necessarily that the high is the green candle in this case, or the up candle, and the low is the red candle, the down candle. So I'm not going to necessarily call these the green candle and the red candle because I know some people use black and blue candles. I know some people use a bunch of different other colors, but in general, it's the up candle and the down candle. So if we draw a little picture here, let's say this is the up candle right here, and then we have the wicks, and then we have the down candle right next to it with not even a top wick and a big down wick. We have an example here of here's the high right here because this is the up candle on the left, and then here's the low. This is the low of the two candles. So it doesn't matter like which one's higher and which one's lower. It just has to be two candles. There has to be an up move and a down move. And then in between that, you can mark out which is the high and which is the low. So, I mean, you can find examples of this. This should be super easy. But like right here, this is a perfect example. So right here, we have a up candle right here. We have a down candle right here, and then an up candle following it right there. So if we mark this out, we see the high is actually the down candle, and the low between these two is actually the up candle. So you're going to notice that quite a bit. It doesn't necessarily matter. Like this isn't the low because it's a down candle, because obviously you see this one's much lower. So that's always important. And then obviously you can just snipe these on every single time frame. So right now we're on the 5 minute. We'll go on the hourly time frame if I can find the chart. Uh, Yep, again, right here, we have a good example. The low between these two candles actually is the red candle in this case. And it's actually the low and the high are on the same candle, so it's probably not a good example. But right here, we have the high being the green candle between this candle and this candle right here. Actually, I'll even zoom in for you guys. So we have bang, bang right here. The low being between these two being the bottom of the red candle right here. And the high is the green candle. So that's super basic. I probably should have done that in the first video, or the first like video being candlesticks and then this, but whatever. Again, so then we'll see that quite often. And this feeds us right into trends. So this is kind of like highs and lows and trends. So a trend forms, an uptrend forms when we have higher highs and higher lows. So we see a bang, higher high, higher low, higher high, higher low, higher high, higher low, right? So we see all these lows getting higher and higher. We see all these highs following it getting higher and higher. That is an uptrend. And the opposite is the same in the opposite direction. We see lower low, lower low, lower high, lower low, lower high. Obviously, I'm terrible at drawing these, but again, we see all these lows getting lower, all these highs getting lower. And then obviously we will learn later how you can nab trades off of these. But for now, we are going to worry about looking for these trends. So this is a perfect example of a downtrend right here. So we have this high. Let me get my magnet out. So we have this high right here. And then we follow it with a low. Oh, okay. With a low right here. We get a high formed right here. And then we get a low formed right here. So I'll just change these to like red and green so it's really easy for you guys to see. New low, this being a high right here, this also being a high. So we could see right in this, right here, just this whole section, we see this high get formed, lower low, lower high, lower low, lower high. actually right here, right? So we see this continuation of this move continuing to move down. So I'll just get rid of all these. And then the same goes for an uptrend as well. We will see continuation, higher highs, and higher lows being made. So we have kind of one in this little section right here. So this is a perfect example. So we have a low get made right here, a new high get created right here, followed by this low right here. And then we have another high get made here, and then a low get created here. That's not even where that wanted to go. Right? So we see all these these trends start to form. And these are easy to spot. I'm not gonna say that these should be easy to spot for you guys. So obviously this is why I use TradingView, because this is just so easy to see are all these different trends and these candles, everything is super easy to spot. So obviously we see higher high, higher low, higher high, higher low, right? And these trends you'll see happen all the time in the market on every single time frame on anything you trade. You trade gold, you trade GBP USD, you trade NASDAQ, anything you see, you will find these every single time. And then also the third way market moves is sideways. So we see right here, up, down, up, down, up, down, right? There's nothing going here. This is another good example, right? So nothing moving. So that is kind of part one of these trends and highs and lows. Highs and lows feed right into trends. So, and trends are what you want to trade with, right? You never want to trade really against the trends necessarily. You can try to find price just move the opposite direction, which tends to happen sometimes, but the majority of the time, you want to trade within the trend. So obviously, you see a good example of this would be, uh, okay, well, now I'm just seeing liquidity sweeps, so maybe not the best example, but like I said before, you want to trade usually within the trend, and you can find these trends by seeing highs and lows get formed.